Good morning. Welcome to Taking Stock. It's Friday, the 28th of July, 2023. Nice to have you there. And by all means, leave some comments there. In fact, we've got one comment already. We'll get that in a bit. By the way, John isn't here. He's left me in the lurch. He's taking a long weekend. He's one of those guys, books the Friday and the Monday off. Yeah, nice long weekend. By the way, listen, I want to talk about today. Two sort of quite well-known, investors, traders on Twitter have had a bit of a spat about charts and trading and investing. So I want to hear from you, okay? And investing versus trading. Now, it's all about time frames, isn't it? Basically traders, data traders, in and out, investors for a longer period. Who do you think makes more money? Which one are you? Let me know, okay? And I got to thank you for subscribing yesterday. If you haven't subscribed, please hit that subscribe button and you get notified when we go live. And yesterday we started on, I think, 2,995 subscribers. It's gone up to 3,009. So we're getting there. And the reason why I want to create, there's a lot of passionate investors out there, in the micro cap, small cap, UK stock space, and it's not catered for very well. I mean, you go on Twitter, there's passionate conversations. I had one today on bulletin boards. They're everywhere. They're in Telegram groups. I want to bring it here. You can make comments, please, below, and we'll talk about that. Okay. So, in fact, the discussion I had was about Destiny Pharma, but I can't talk about that because people say I'm ramping. I do hold Destiny Pharma, but the guy just said, I think the share prices rallied very strongly on what's a CEO appointment, as it's not that. That was the catalyst. But then that people did more research and realized it's undervalued. I can go on about this, but I won't. But that kind of chat we want, okay? And in fact, coming back on that, it was yesterday, Mellow Marketable. We were looking at most shorted companies. So check that out, because I said there are plenty of opportunities from the shorted companies. The most shorted companies in the UK. And Future PLC was amongst that. ITM Power was amongst that. There's some others. And one of them was called International Distribution Services. And I thought, I never heard of those. And even John didn't hear of them. John's ex-editor of the Investors Chronicle, and so what the heck is that? So thank you to Mellow Marketable. He said International Distribution Services is the new name for the Royal Mail. Wow, it is. And he said they took an internationally recognized brand name and changed it to the most bland corporate name possible. I agree. International Distribution Services. But it's most shorted. And so that's interesting. Okay. I just want to go to the website here, Vox Content on the website, and cover a bit what's on there. Share screen. In fact, someone did comment about the mortgage market, but East Imperial worth looking at. Let's have a chart of East Imperial. I know it's had a bit of a rough time. Quizzes up today. East Imperial. But they've done a deal with, I think, the New Zealand. There we are. Look at that. Honestly, and I said this before, and it's a lot about investing, trading, a bit of that. But if you literally only stick to investing in companies that have risen above 200-day moving average, you'd find you'd probably get better. Because like I said, this you can see from the IPO year back in July again. You find many stocks IPO'd in July, the summer of 2021, because the markets are high, money was cheap, it was free flowing, people were investing everything, including those monkey pictures, NFTs for £1 million. Money just that's how easy people were. They wanted more risk. And top of the market at 20 pence come down to 1.6 pence. But they seem to be gaining traction here now. And I do quite like this. I do like looking at price action. It's a higher, it's almost breaking a previous high here. It's above a 50-day moving average. So you could say maybe this is a bottom. Who knows? There is a micro cap. But if you want to read a bit more about, some comments there, and look at this there, okay? So let me just go to some comments here. If you've got comments, let me just get the one that someone described below. And he says, "Good morning to you both." John's not here, so I'll pass that on. But good morning to you both. For your daily knowledge, it's very helpful. Number one, 3 questions here from Parachute. When do you expect the Bank of England to pivot? Well, they keep saying they're going to hold it higher for longer, the interest rates. There's what, 0.25%, 25 basis point rise next week. And in fact, we'll be live for that. 12 p.m. we start next week. So we'll be live for that. But they said they're going to hold it higher for longer. I think if the economy starts to suffer and inflation comes down, they'll change their mind. It's political pressure then, isn't it? It becomes more personal when people are losing their jobs. But we'll see. But I think the markets will get used to higher interest rates. As all, right now we're seeing the markets in the microcap space tend to rally because we're seeing news is getting less worse. That's all the market needs to know. It's priced in the bad news of the last 18 months. We are loads on the AIM all share, so it's priced that in. So all it needs to know now is the news getting less worse. If it is, then the markets will start to rally. And I think it is getting less worse, judging by the CPI numbers that came out. When do you expect energy costs to substantially lower? Well, let's go. I mean, it takes a while to kick in, doesn't it? But if you look at Shell's profits, for example, they've dipped, yesterday because the oil price is coming down, gas price is coming down. Have you seen the gas price chart? I think there's a very good trade in the gas price chart. Let me just share this with you on the commodities. Here we go. Natural gas. I don't trade basically commodities stuff like that. I'm just saying. But look at that. This is we're going back February. This is Ukraine, invasion of Ukraine by Russia. Double top here, breaking down, and then let's get rid of the RSI here. And then you've got down from 9.5 down to 2.5. And you can see here, I put a sort of trading range here of where I think it'll break. But natural gas is down, it's massively down. How long does it take to feed in? It's starting to now, isn't it? We had a artificial price cap on energy prices, so that didn't help. And that's what do they review that every 3 months? I think the price cap on energy prices. But don't forget Brent crude as well. Where's Brent crude oil? Again, we are at 125 a barrel of oil. Back in June 2022, we're now down at 83. What's the mass in that? 50% drop. So it will play through, it will play through definitely. It's just a matter of time. So the Bank of England, I think everyone seems to know this, apart from the central banks. And in fact, the Fed obviously raised their rates. Everyone seems to know that, the effect of these interest rate rises takes a long time, apart from them. And I think they've overdone it. And so I don't think they'll hold higher for longer. I think they'll have to reverse. They went too fast. They were too late. They overstimulated. And that's what pushes the markets up. And now they're over tightening. They're making, wrong decisions on both ends. You watch, they'll make some kind of data-based excuse in the next few months, and they'll have to start winding down interest rates. That's the sort of bonds market saying anyway. So let's go to the comment of the day. So I want to go to Rise and follows. But let's get back to the subject, right? Investor versus trader. What are you? Comment below. Let me know. Subscribe as well for future. What are you? Do you do? I mean, typically, how long do you hold stocks for? What do you do? Do you look at charts more than fundamental news? Just copy someone on Twitter. What do you do? What's your investment strategy? What's your trading strategy? I would like to know. Now, as far as the argument, who makes more money? Investors versus traders. Number one, right? If you look at, say, the top 100 richest people in the world, there's plenty of investors in there. There's not many traders. Because we know over the long term, it's very hard to gauge day-to-day movements in a share price. But if you're investing in a business or an index, for example, over the long term, the stock market has gone up. But in the short term, it's very volatile. That's why it's hard. And in fact, just check out any trading platforms, fine detail. So you've got any of them, IG, whatever they are, top right there, you'll see so like 80% of retail investors lose money when trading CFDs or spread bets. 80%. What does that say? Basically, 2 people in 10 make money. Now, if you think, oh, I'm better than them, there's others, have a crack. But like anything, trading, a lot of experience is needed. With investing, as long as you're investing in a decent company, listen, down the smaller end of the market caps side, they're more risky. Of course they are. But I'm talking about, in sensible dividend-paying stocks over the long term. If you reinvest in dividends, you can do well. But it's like with trading, it's a very short race, and you don't know what the obstacles are. Basically, they're very surprised. So, but in my mind, I think you should, incorporate both. And there's no reason why a hybrid model doesn't work. I tend to look at, both fundamentals and charts. I love looking at both. And if they line up, I mean, if fundamentals stack up, I like the company, they're undervalued, they're growing, for example, and the balance sheet is good, and they're looking momentum. Is the chart looking right? What's the forecast as well going forward? Are they forecast to grow? Or what's the target price on this by brokers? Why are they saying this? So if you look at both, you can do well, I think. And but that's the thing. It's almost like doing fundamental research, and if the chart isn't right, waiting. Because you like the company, it's not the right time. And so that's what I think. But I'm interested to hear your side of it. What do you do? Do you trade? Do you invest? What's your longest holding? What's your shortest holding? Do you make money at it? Let me know. Okay. Okay. Let me just go. But I'm missing it. I want to go to the right thing here. So I may be missing some chat. I'm on the wrong page. I do apologize. I'm also listening to myself now. I've got to mute this. Okay. All right. So I'm looking at the front page of Vox here. I want to go to the front page and just look at the risers, the fallers, and the news today. And I want you to help me because I'm on some of these companies. In fact, Rashmi was saying there, I don't know if you saw Rightmove's results today, but it's worth looking at. Rightmove's results came out, and they're literally the best since 2018. Now, everyone's talking about, house builders taking a hammering. And if you look at, say, Persimmon, all these house builders taking a hammering, and the mortgage market, of course, going down. Look at Persimmon, for example. It's gone from, 32 quid down to 11 quid, one of the biggest house builders. I call it Taylor Wimpey and Gleeson, all right? But Rightmove have come out with excellent results today. And they say the revenue has grown. It hasn't grown that much since 2018. The subscriber numbers are up, everything that. And you realize, often John talks about this, the picks and shovels of industry. Who is actually, for example, who's building the houses, who is selling them via portals. And so Rightmove, OntheMarket, Zoopla, pretty much top three. Rightmove by far is the top three. Rightmove is valued about 100 times bigger than OntheMarket. And so this article here, how is it by this article here about OntheMarket, is essentially saying if Rightmove come up with good results, then is this a good tell for OntheMarket? Of course, Rightmove was the first one in the market, so it's a 4.4 billion market cap company. OntheMarket at 44 million. Howard Capital, one of the fund managers up there, recently increased their holding of it on the belief that they're undervalued. And they've got about, if we go to OntheMarket's, so 44 million. If you got their sort of results recently, full year results, they've got about 10 million in cash. They made a little bit of a loss there, but year-end cash 11.3 million. So the 30 million EV is like 30 million, and they have not far off the amount of advertisers the Rightmove have. The difference is the average revenue per advertiser. Okay, so they charge £210. It's going up 12%. That's good. That's what they need to do. They've got enough advertisers, just charging a lot less than Rightmove. Rightmove charge 1,141 quid for this. That's why they're earning a lot of money and their margins are very good. But if OntheMarket can keep increasing this average revenue per advertiser, then they're onto a winner. And like I said, the valuation is silly at the moment. And if you look down at holdings, Howard Capital, and I don't know if it's Paul Hill chatted to one of the fund manager from Howard Capital, but they've increased their holding to 8.2% now from 7.3. I think it was Chris, was it? But he was saying that they're silly undervalued on the market. So it's a good play here. What I'm saying is Rightmove have come up with news, very good news, OntheMarket, very similar business model. Will they come up with good news? And yet these stocks have been hit with a similar kind of sentiment that the house builders have. But they're not, are they? Because people are still making purchases. Okay, maybe not building as many houses, which will hit the house builders, but house sales are still going through, and that's where these guys profit from that. Okay, let's go to the front page. There's East Imperial there. Now let's look at the most followed company, Star Energy. I thought, what is that? And I realized it was the old iGas, which came into a bit of trouble. WANdisco again is let's have the chart of WANdisco. Of course, they had issues with the sales director massaging figures, shall we say. And if you've never seen a chart like this, look at that. 13 quid down to like a placing at, was it 50 pence, I think, for $13 million. It's going to rise. But I was looking at some of the size of their contracts. Listen, in my mind, this company was woefully overvalued up here. I don't know what the valuation like down here is, but surely there's a bounce trade in there. That's for traders, of course, not investors. I don't know, but that's one of the most followed companies there. Strix Gaming, they're into sort of, I looked at that, NFTs and sort of NLP and AI. They're trying to cash in on that kind of model. But WH Ireland, Bushveld Minerals. I have no idea what's going on with this news today. It's the most complex. You get RNSs come out, and sometimes it's quite obvious what the news is about. You can just read it, it's just the news about. But it's so intricate, and I have no idea what this. But essentially, as you can see, the share price is down by 16%. So I'm assuming it's not good news. And in fact, somebody on Twitter did say we're getting rinsed again by the looks of it. So as you can see, Bushveld, the reason why it's got a lot of followers is look at this chart. Phenomenal rise. And when you have a rise like this, it tends to gain a lot of support, a lot of followers, many buying up higher. So it went from, they do vanadium, by the way, South Africa and all that. And vanadium is, in fact, I own a bit of stock in a company that does vanadium flow batteries. It's IES who had news out today, which is quite good. But they went from like 1.2 pence up to 48 pence. Multi bagger. Where should you have got out? Well, essentially, you can always rely on the 2-day moving average, If you look at this, it's gone up here, right? It touched it here, went around, didn't touch the 200-day moving average till about here. You think, okay, there's something not right here. If it's touching that, the trend is breaking down. If you'd got out there, it wouldn't have been so painful, would it? 32 pence. And now, what are we down at? 2.6 pence. And it's basically, not, in fact, it had a little rally here and came back down below it. But had a little rally here, but again, it's gone down. That's really painful for a shareholder if you've been holding for a while. I don't know why I put that on there, but it's not looking good. And in my mind, unless I can go back above that 200-day moving average, which is what, 4.4 pence, I wouldn't look at it. But you can add an alert here. Crossing 200-day moving average. Let's do that. So I'll get an alert now when it crosses that 200-day moving average. And I think I've got one of those in it already. So that's Bushveld, one of the most read and one of the biggest fallers as well. Cineworld, the collapse of that. They got billions of dollars of debt. AFC, this is very interesting. This is green hydrogen. And it's one of the risers today. As you can see, 22.47% up there. And what do they do? But essentially, they've done a deal with Speedy Plant Hire. And it's to a leading provider of hydrogen power technologies they are. But this collaboration, which followed a successful launch of AFC's Energy H-Power generators last year, will provide the UK construction and temporary power market with AFC's energy sustainable zero emission temporary power solutions designed specifically for off-grid market. This is quite significant in my mind now. We've got hydrogen being offered on a bigger market base to construction workers. It just shows you the transition. And that's why they call it a transition. Now, if you don't have any exposure to any kind of renewables, regardless of what your opinion is, the money is flowing into renewables, right? And there's always a saying, follow the money. And it's not going to start flowing back into oil and gas. There's some opportunities in oil and gas, of course there is. But what I'm saying is you should probably think about having exposure to renewables in some way, or these, any kind of exposure, because the money is flowing in and it's not going to stop. The flow will build and it'll build and the tide will rise on all these kind of stocks. So, anything, and even if you hate the idea of renewable energies, doesn't matter. Sometimes you need to get your personal opinions away from the investing opinions because money is flowing in. Just do a read about it from Norwegian sovereign funds. Big money is flowing into renewables from, hydrogen, vanadium, all this wind, solar, all that. It's flowing in. So there's opportunity there. What else is on the front page here? Vox. Let's go back here. So AFC, let's look at the chart of AFC. So I know they've been hammered with a bit like ITM as well, similar stock. Yeah, it's not looking pretty. And what's worrying about this? It had a fake break. If you're using a 200-day moving average as the bull bear line, it's had a couple of fake breaks here. I mean, that one there really rose above that and then broke down. So it needs to be a committed rise. But it's a good start. Is this a bottom? Maybe the start of one. You often get this sort of V-shaped recovery and a pullback and then a higher low and then a move up. But it's looking quite good. But I think that almost adoption now of a mass market for green hydrogen is quite good. I don't know what your thoughts are on that. My two best shares for percentage gains are, in fact, big cap shares, Rolls-Royce and BAE. I've made some howlers where I've tried to act as a trader, fingers burnt, and I need to be more disciplined. That's Michael. Yeah, I know what you mean. Yeah, no. You can. Some of micro caps, can be very volatile, I know. But I think fundamentally, when you're researching them, you use the same kind of tools, as in, if they're pre-revenue, you just look at valuations, compared to peers and all that. But the most essential thing for micro caps and nano caps, and let's be honest, you can do multi-baggage in a couple of days in micro caps, but they've got to have some cash, and that's the most important thing. If they don't, they're going to go nowhere. But the potential has to be very big. That's what I think. Anyway, it's no point looking at macro caps that may do 20, 30, 40%. You're looking at several 100%. That's the potential. Of course, the risk is higher because the reward's higher. So more things may go wrong. So also it's about exposure to those. But BAE, Rolls-Royce. Let's look at the Rolls-Royce chart. It's done very well, isn't it? But again, came from a massively oversold position. And do you know what? Even if you're not in the chart, just basic, chart. Look at that again. If you look at the moving averages, and I tend to do is look at the 50-day moving average, crosses that, then breaks previous highs. So that's a previous high, and so you're up here. And again, a bit of support, but it breaks 200-day, and then it builds up. So I'd say that's a range there, isn't it? You can see that a couple of times. It's trying to break that. Look at that. 93 pence level, and it's gone higher. But of course, you do research on it first and make sure it's turning around. And again, look at that. A resistance line there, breaks higher. So I'm sharing this. I'm not sharing the screen. Sorry, let's go back here. So Rolls-Royce, look at that. Going back here, it's gone from, this previous resistance here at 93 pence. It broke the 50-day moving average here, and I'm looking for a break higher above previous highs. And it's done it there, and it's broke up. And you see it's gone above here now. And previous resistance, good trading update, broke up again. And that there, if you're trading, then that there is a good risk reward. You think, okay, I'm up for long here. If it breaks down, then it shouldn't go below 143. If it does, I'm out. That's the kind of thing for trading. But you can apply that to investing as well, because you've done well there. But BAE, let's look at that. BAE Systems, is that in there? No, maybe it's not. But well done on that anyway. I tell you what, you should look at a couple of where is it? A couple of RNSs worth looking at. I think today we looked at AFC. Oh, by the way, let's look at WH Ireland. Right, this is obviously a broker. They've done a fundraise today, raising 5 million at 86.67%. What I laugh at sometimes, though, it's almost a standard RNS. And the company's pleased to announce today, we've raised money at 90% discount. Well, who else? I mean, the reason why they will be pleased is I didn't realize how serious it was here. They said in the 3 months to the 30th of June, the company made a pre-tax loss of 1.1 million on revenues of 5.6. Now, the company had been in discussion with the FCA. In the absence of the injection of further capital, a solvent wind down of the group would happen. So they're on the edge of going bankrupt, WH Ireland. So that's why they're pleased. Shareholders are not pleased, of course, but if you are holding shares, thinking, why were you holding shares if it was that much of a basket case? But look at that. But as a trader, like I said, now if you'd bought in, the biggest worry this company had was going bust. Now they've got 5 million cash, depending on how much debt they've got. I don't know if they've got debt, but that worry has been removed. So from there, are they good value? And you can see they opened at just shy of 5 pence. And now they got up to 8 pence. So, for a trader's point of view, it's a lot jumping around, But you have to be on that news. But it's very interesting how they've. I didn't know they're in such a. I don't know why I'm laughing. I shouldn't be laughing. Star Energy, Bushveld, most read. Do you know what a company worth looking at today? One of the risers on the front page here is where is it? Tekmar Group, Upland as well. They've got that's good news. The Upland Resources, Sarawak Block, rig evaluation assessment. Of course, that's based in Brunei, Sultan of Brunei at one time. When I was a kid, the Sultan of Brunei was the richest guy in the world. He's worth 25 billion. And that was enough. Someone did an estimate. That was enough champagne bottles to go from the world to the moon, run the moon 3 times, and back to the Earth. That's how much you could buy. That's how you could sort of quantify it. But of course, he's nowhere near the richest now. But of course, his riches were built on oil and gas. So it's very exciting that Upland are, in agreements there. There's the reserves there are quite big. So the potential there is very good. But this is a company, Tekmar Group, very interesting, worth looking at, I think. And in fact, it's worth having a look at this bit of content here with Paul, James Thorne, a fund manager at Columbia Threadneedle. But essentially, the news today is quite boring. It's extension of banking facilities, which is good, gives them a bit more breathing space. But down here, so the company also confirmed financial performance of the financial year remains in line with management expectations set out in the interim results. Okay, so let's go back to the interim results. And if you scroll down to interim results, right? Now, this is taking into account it's the 16 million market cap, okay? Interim results. And the growth is good. Revenue of 17 million, just for 6 months, up from 13 million, with strong growth across offshore energy. Oh, offshore energy. Hey, so something, renewables, exposure to that. And then you scroll down, EBITDA loss of 600,000. And they say here, expect the business to break even. I always like to see that. So when small caps saying they've got that roadmap to, profitability or break even, quite like that, for the current financial year, with revenue in the region of 40 million, of which 90% is already secured. That's, in my mind, that's quite good news. They're not saying they hope it'll get that, but 90% of that is secured. And if you look at it, they've done 17.7. So this H2 is going to be, even a bit more growth than that. And like their market cap is 16 million. So obviously you have to delve further because they've obviously got some debt here. But I mean, it's worth looking at that. The story's interesting, so I did read through it, and they did go through a strategic review, which means they were in a bit of trouble. But then they've had two big investors come in, quite experienced, and have helped them out with a convertible loan note of 18 million. Now, convertibles can be quite bad if they're offered by a third party whose job it is to just, that's their business, convertible loan notes, because they don't care about the company they're issuing money to the loan. They'll just sell when they want, and it'll hammer the share price. Now, if the convertible loan note is issued by someone connected with the company, a shareholder of the company, then their interests are aligned with shareholders. So it's a very interesting company. Tekmar it's called, and they are in that it's engineering, and they protect and support all those wind farms and all that kind of stuff. So it's maybe worth a look. TGP is ticker there. Anything else worth looking at? Let me know if you, let me just scroll down here. Crypto Toad 4Q. Don't worry, crypto nonsense. In fact, we can look at Bitcoin if you want, but I'm not going to. So any charts? Oh, by the way, just on some business stories. NatWest, which of course had a bit of controversy, sharp rise in first half profits to 3.6 billion following a week of high profile resignations. The profits were better than expected, up 2.6 billion a year earlier. That's nuts, isn't it? The board of NatWest, do you remember Nigel Farage, after he, because NatWest owns Coutts, a very posh bank, but Coutts doesn't sound like a posh name. I was talking about on the weekend podcast, and Steve said it sounds like a disease. He's got the Coutts, he can't come out tonight. But I think this is awful, just cutting people's banks, because that's people's livelihoods, on basically on what they think, their opinion. Banks shouldn't be making that decision unless you're some kind of, heinous criminal somewhere and you're a mass murderer or something. But, not in that respect. Nigel Farage, who's like, regardless, I think he's a bit, I'm not a big fan of his, but you can't just cut people's banks. But he said the entire board should go. The entire board, everything. Demolish the building, get rid of them all. He's never one for subtleties and nuance. And one other thing, AI, Netflix are touted apparently AI jobs amid Hollywood strikes, which is annoying, isn't it? This is why Hollywood strikers are striking, it's because they're worried about their jobs. But Netflix has triggered an angry response from striking Hollywood actors and writers after posting a job advert for an artificial intelligence expert. So if you're an artificial intelligence expert, they're going to pay you up to $900,000, I think that's right, per year, just to be an expert in AI and stuff like that. Can you get an AI to deal with the AI? But that would, the very reason they're striking is now being fueled by more anger by them posting that job, saying, yeah, we're looking for more AI people. They talk about throwing petrol on the fire. That's it for today. Let me know. Don't forget, subscribe if you haven't subscribed before. Or, if you just watched. Like I said, John's away. Normally it's two of us. That's why I'm here like a rambling fool on my own. He'll be back next week. But we want to get this, this channel like a community. I know there's a lot of passion out there for investing. So the more you share, the more you want us to cover, we will. But hit that subscribe button, please, and have a nice weekend. And we'll speak next week.